A very great afternoon, everyone. A very great afternoon, everyone. As we continue with the momentum of NCMAC 2025, we now step into the subject that lies at the intersection of policy, compliance, and economic vision, the changing landscape of direct and indirect taxes. Taxation is no longer just collection and compliance, it's dynamic lever for development, equity, and governance. From rationalizing GST frameworks to digitizing income tax assessments, income tax and India's tax ecosystem is undergoing a profound transformation. Direct taxes reflect a nation's philosophy of income distribution. Indirect taxes influence consumption patterns. This session is our opportunity to decode the recent reforms, anticipate the next wave, and strengthen our advisory role, not just as professionals, but also as partners in policy execution and building. Let us now welcome our expert speakers as they break down complexities and offer clarity on this ever-evolving financial landscape. Can we have a huge round of applause for all the speakers before I invite them? I would like to invite CMA Dr. Pawan Jaiswal, Senior Tax Consultant and Finance Expert. Sir, please come on to the dais. I would invite CMA Bhogavalli Mallikarjun Gupta, Associate Director, GST, RSM Astute Consulting Private Limited. So please come on to the dais. Now I take the opportunity of inviting CMA Mrutyunjay Acharya, General Manager of Finance of Numligarh Refinery Limited. I request CMA Harshad Deshpande, Council Member of ICMI, to please come on to the dais. I request CMA Rajendra Singh Bhati, Council Member ICMI, to please come on to the dais. I request the Secretary of EIRC ICMAI, CMA Damodar Mishra, to please come on to the dais. I request the Secretary of Bhubaneswar Chapter, CMA Barda Prasanna Nayak, to please come on to the dais. I would take the privilege of introducing you to the esteemed speakers. Amongst us, we have CMA Dr. Pawan Jaiswal. He is a Senior Tax Consultant and Finance Expert. He has been a member of State Audit Advisory Board of CAG of Uttar Pradesh, a member of ICMAI Task Force on Income Tax Bill 2025, and chaired the Direct Taxation Cell for Amendment and Income Tax Statute. His main forte delves into decoding and solving intricacies of taxation for the common man and helping the government by promoting tools to check the revenue leakage. He has been instrumental in compliance of TDS e-governance and GST implementation. He was specially invited advisor for the National Law Commission and Mahadayi Water Dispute Tribunal. His tax expertise and opinion has been acknowledged by the Honorable Gujarat, Odisha, Delhi, and Allahabad High Courts and Honorable Apex Court in national and international arbitration matters related to taxation. He has authored textbooks on taxation and management and served the government as the designer of various tax legislations. Sir, thank you so much for accepting the invitation and coming here. May I request CMA Jagannath Panda to please welcome CMA Dr. Pawan Jaiswal. Thank you so much, CMA Jagannath Panda. Now I take the privilege of introducing CMA Bhogavalli Mallikarjun Gupta. He is also a speaker for today's session. He is an ACMA and a certified product manager from ISB, bringing over 24 years of extensive experience in indirect taxation litigation, advisory and advocacy. Has led finance and tax transformation initiatives at prominent organizations, including Oracle, Infor, Logo, Systime, and Dempo, with a strong focus on successful ERP and BI system development and implementations. holds key positions within the ecosystem. He is a co-opted member of the Indirect Taxation Committee of ICMAI, member of the Hyderabad Zone's GST GRC, and co-chair of the GST and Customs Committee at the FTCCI. He has earned several accolades, including the Indian Achievers Award in the year 2021, and recognition as one of Your Story's 100 digital influencers in the year 2020. He has hosted top 10 podcasts focused on taxation. So thank you so much, sir, for coming. May I request CMA Avijit Goswami, sir, EIRC member, to please welcome CMA Bhogivalli Mallikarjun Gupta. Datta, sir, sorry. CM Avijit Datta, sir. Thank you so much, CMA Avijit Datta, sir. Now I take the privilege of introducing to you the next speaker, CMA Mrutyunjay Acharya. He is a General Manager Finance of Numligarh Refinery Limited. He holds Masters in Commerce and in Business Administration, apart from being an FCMA and FCS. He has completed post-graduation program in the tax management from IIM Bangalore, having more than 33 years of industry experience in leading establishments like BHEL, Bharat Electronics Limited, Delhi Stock Exchange, and Balmer Lorry Limited. Associated with eminent B schools in India like IIMC, XIMB, PMI, IMT Ghaziabad, Amity B School, etc. As a guest faculty over the years, he has been also giving articles on GST, which were published by leading newspapers. As a member of the CAASB and CASB and Tax Committee of ICMAI, he played pivotal role in bringing in a number of standards, preparing representation before the Union Finance Ministry in regard to union budget framing and lots of other things. He was nominated as chairperson of the task force formed by the ICMAI in connection with the new income tax bill of 2025. He has authored a numerous number of books on direct taxes, service tax, and on GST. Sir, it's an honor to have you with us. May I request CMA Subhasis Chakravarti, sir, EIRC chairperson, to welcome CMA Mrutyunjay Acharya, sir. Can we have a huge round of applause, please? Thank you so much, sir. May I now request CMA Subhranshu Paikrai to welcome CMA Damodar Mishra, sir, Secretary of EIRC of ICMAI. Can we have the applause coming, please? Now I request the Secretary of EIRC, CMA Damodar Mishra, sir, to please give his welcome address.
Very good afternoon. On the dais, CMA Dr. Pawan Jaiswal, Senior Tax Consultant and Finance Expert, CMA BM Gupta, sir, Associate Director GST, CMA Murtuza Acharya sir, General Manager Finance NRL, Numalagiri Refinery Limited, our council member CMA Rajendra Singh Bhatti sir, CMA Harshad Dashpan sir, and my Bhubaneswar Chapter Secretary CMA Bardar Prasanna Naik, of the dais, past presidents, past chairman of AIRC, Bhubaneswar Chapter, delegates from different corporate bodies, corporations, representatives from chapters, different regional councils, ladies and gentlemen. So even though it is a post-lunch session, the session is so dowry, but the speakers in this session definitely speak in such a way that there will be no boring in this session. So on behalf of 62nd National Cost and Management Accountants Convention, I welcome all the dignitaries on the dais and off the dais to this technical session, that is navigating the direct and indirect tax landscape. So now, regarding direct tax, there is so many questions in your mind. So definitely our speakers will solve your problems in direct tax, regarding direct tax questions, and our expert in finance, both direct and indirect tax, Dr. Pawan Jaiswal is here. So definitely this session will be more and the takeaway, we will take the best benefits inputs in this session. Thank you all of you.
Thank you so much, Damodar Mishra sir. May I request CMA Rajendra Singh Bhatti sir, Council Member of ICMAI, to please give his keynote address on direct taxation.
Thank you, Avnish. Good afternoon. As we have started today's session with the morning, as I was mentioning in the morning also, that India's power has been, seen by the world. And then focus of India is on the hard power, I already mentioned, but now focus is on the soft power, economic growth, and Vision 2047. India has already targeted, and recently we have seen India is the progressive country with the 4th largest economy. So taxation play a pivotal role, and then we have recently seen that government is planning to have a new income tax bill, which will be a minimum government and maximum governance. So with that also, our institute is peer-to-peer working on that. As we have before that, when the first meeting was held for the stakeholder consultation, we all went. I think some of the members who are sitting on a dais, they were also part of that. We went and we discussed. And after that also, when the draft came, so we also tried, because unfortunately we couldn't got the chance in accountant definition. But the law was the same, whatever the earlier, they have framed in a new clauses. But now, after consulting with the select committee and the response we are getting, we'll definitely have our role in that, and that the day is not far from here to that day. We will have our name in that our so-called definition, and so-called demand will be there. That I am very positive on that also, because as we have a conversation with our authorities. See, because after that, the response and the way of working we have done with the income tax officers and the board level, we are getting a huge response from the officers also. This is the place, Bhubaneswar, from where we have started the training of officers on an inventory valuation, which is the role was given in the last budget. So we did the training of an income tax officer here in Bhubaneswar with the help of the Bhubaneswar team. I thanks the Bhubaneswar team for arranging. After that, followed by that there was all over India income tax officers training in Puri. From there, the officer at the Bhubaneswar region have expressed that there is a CMA institution who did our training on the inventory valuation and some, accounting aspect concern. So we have got the 3 training in the lined up in the June month. One is the Chandigarh and the 2-3 in the south also we are lined up. So we are training that officers also are giving the insights of the, the inventory valuations. And they are more of a keen and talking on that. One of the officer is the PCIT, he was telling in my 30 years of a life, first time thoughtful to have this kind of a session where we got the insights of the training, what are the valuations role, what are the role of a CMA profession and so on. After that, because right now after income tax bill, act amendment, there is a rule amendment is going on. So wherever the things are, because this act was given to the 150 officers, those who are an income tax officer, they have drafted, they have just, reproduced the law in 536 clauses, because the earlier the income tax act was something like wherever the new amendment was coming, that was coming to the suburb in the proviso and the explanation form. So that is being elaborated. So because in a technical era where the technology is reading the laws and all sort of ethics, assessment proceeding. So the reading a law in earlier law was for the human being not able to remember all sort of things. The AI is the only machine which is guided by some force. So not able to do the assessment properly. So that this thought came, and then they came with the new income tax bill with the new amendment which we have seen. So in that, the rule is being prepared by they have already constituted, the assignment is given, but we have got many from the office of like Kolkata we have got from the Jaipur, Rajasthan also. They are asking us that your institute should give us some comment on this specific rules. So we have given that also. We are peer-to-peer working on an income tax rule also, where we will have our, the valuation, wherever the valuation refers, we are giving our suggestion, we are giving an insights of that also. That we have already prepared, and our department is also working on that. We are holding an inventory valuation seminar in the all over the country also, because department has already taken employment from the practicing cost accountant. Some locations they have employment is open. They have selected some firms. Now we will have because we have recently found out that in the faceless scheme there was this inventory valuation provision was not there. There we can select and they can refer it to. So when we had the training, then we told that, sir, the department board has not approved. So we have written to the board on that also, that will be amended. So after that we will have inventory valuations assignments for the members also. We are working peer-to-peer because we have seen the focus of a government on revenue increasing, because direct tax is India's one of the good product, because wherever you are earning a more than 15%, it's we called as a good product, because the direct tax collection growth is around say 18%, 17 and something, some sort of things. This is another one of the good product. We have seen the GST, the way of collection. We have recently seen the 2 lakh plus crore of a target, 2 lakh crore of collection in the month of last month itself only. So the progress is always on the money angle, because everybody understands the money language, and when you have a huge money, then you can think like anything, whatever you have a plan in your mind. So India is getting a huge revenue, because you have seen the 44 lakh crore of a budget size which has been changed in the last 10 years. So in this form, the India want to be a soft power in the world side, where we are following the international practices on in a taxation also, for giving a new investor eyes in that, because for the international investor and the world, we have shown that we are in a hard power also, we are very powerful. So in the soft power also, we have shown in the direct tax regime also, we have a lot of experts. They will share our what of the mechanism of a governance. They will share their experiences with us also. So hard power we have recently seen, because in just in 3 days we have shown to the world that how much powerful we are. We are sleeping at a very peaceful sleep at a night, and then war is going on. The country which are other country, they are also facing the war, and what is the lifestyle in their country here? Nobody was just only 2 days fear, and then 3rd day we are just happily traveling here and there and all sort of. because this country is taking, going towards the normative power, I can say, with the seeing of GST success. Adaptiveness of the, new change is something like we can say, because the otherwise in the midnight of someday tax came, and all of a sudden it's gone. In a 5 year down the line, you are having a huge collection and something which is a commendable. And our institute efforts are always with the government, and we are also doing wherever we have a role to play, and our people are a very expert in the GST and domain also, and we are also doing for the learning program for our member and all. Also in GST also we have recently launched some course for the member to have a more of the GST and income tax also, more of a training session, brainstorming session. And today only we have launched one of the this morning in the guidance on a appellate authority, appeal before the appellate authority, and guidance for the student also and for member also. So we are working hard. We'll definitely achieve our target with the blessing of all of you. And we are always taking the help of a member, and members' support is well like anything, because I feel that when first meeting held with in the Ministry of Finance, we went for the stakeholder consultation meeting on a income tax bill. And then the second day we have shooted a mail to all the member, and then the response we have got, then the compilation was done by our officer and all. So was very just complimented by the officers, and the Mrityunjay sir was with us, and then they have told that, sir, your presentation, and even in the select committee member, they praise like anything, that thanks to the president who lead us, and he is the one of the good resource person for in the good time, I can say. Because he is the tutor for the income tax. The way he expressed, the way he taught the people. So that was being commended by even the chairman select committee in that fashion, that your presentation was really, you need something, you are playing a very good role in the industry, and we will definitely consider it. This is from our side, and I welcome, and I request my member on the dais, they always guide me as your student, so I can take this institute as a proudful member to the new heights. Thank you very much for the patient listening.
Thank you so much, CMA Rajendra Singh Bhati sir. May I now request CMA Harshad Deshpande sir, council member, to give his keynote address on indirect taxation.
Thank you so much, and very warm good afternoon to all of you, respected members on the dais, and respected past presidents, council members, chapter representatives, and my dear delegates. There are two things which are certain in life. Okay, one is death, and second is a tax. So far as we are alive, so far this ecosystem works. The tax will remain. That has been there since ages, and it will continue to do so. So friends, indirect tax, in fact, I'm grateful to my colleague Rajendra Bhati. He has done some great efforts for this direct tax, and since many of us, including myself, been student, that this was our demand to include our name in the direct tax. We are hopeful and also confident that perhaps the justice what we deserve will get this time. And I wish all of you that, you also think we should have a positive minds, should not have any doubt. I always say to anybody ask me that, yes, according to me, it should happen. And we hope that this time it goes through and we get the long pending justice this time. Indirect tax has been always our, forte. As a CMAs, we always, excise and customs, these were the typically traditional areas wherein we started. Many of the practitioners, they started in that domain, and we have been one of the professionals that has helped industry a lot during the most initial days, and we have done a lot of handholding, and we continue to do so. When thereafter VAT came, many of the states we have included in the definition of accountant in VAT, and that carried forward in GST. Now GST also, we have seen that now it is being 8th year of GST. GST is a ever-changing law. It keeps on changing because the collections also of GST are enormously growing thanks to the technology that has given a lot of reach to the government. Just like income tax, the collections are happening because of the increasing of the tax base and, the monitoring of the accounts and the transactions of the business persons. Similarly, in indirect tax, it is also gaining a lot of coverage. You will see that this 2 lakhs crores, you never know, within 2-3 years time that could go 4 lakhs, 5 lakhs crores. So that is very much possible, that is on the cards, and that also gives us the responsibility. Friends, you must be aware about the happenings in GST. Every month we are getting some news that, intelligence has caught some input tax credit scams are happening. So while we are working, let us be also vigilant and enough. Let us not be blindfolded to the data what are being submitted. Let us take a pledge as a professionals of this institute which is formed by the Act of Parliament. So the national interest or the implementation of the law in its spirit is something also we have to look into. So let us not have just somebody has given a data, we have filed a return. So we have to go beyond and think beyond the numbers and understand the way the transactions are happening. You never know, perhaps you can be the next whistleblower, and perhaps that is what the role of the professionals, government want us to play, and I'm sure that you will do it. Many of the corporates, they many times not even aware of what is happening around them, and suddenly they get involved into such kind of scams or such. Indirectly it happens, unconsciously it happens. So it is, I feel that is also we have a role, that let us be vigilant. Now good news is that this GST tribunal, much awaited, is coming. That is also in GST one of the area wherein there is a lot of potential. Earlier, perhaps we all started GST with the returns and filings and all. Gradually, audits and compliances, annual returns that we have learned. Now, the next area of practice, I believe, is the GST litigation, and we are there. We are as a representative, we are already recognized by the GST law. So we have a great opportunity there. Let us gear up ourselves. Let us understand and take the advantage of the situation. Take the advantage of the early mover advantage. What happens is that many times we tend to be a bit lazy. आते हैं तब देखेंगे, है ना? So by the time somebody has already entered, and it's very difficult to replace somebody. If there is a new generation of opportunity, it is always easy to convince somebody and get into. But to take somebody out and get in, it's a bit difficult job. So perhaps that is what I expect, that in days to come, we all should be discussing and deliberating. In fact, as Rajendra said, that we have this one handbook we have released. So we want all of us, those who are in industry also, they also have a lot of work about this indirect taxations, predominantly GST. So let us take that, a step forward. Let us take that initiative, let us take a proactive initiative, I will put it this way, and take a step forward and keep the data ready. Many times, we are doing work for some of the clients, so have a look at their litigation, have a look at their notices, pending notices and what all. These are the possible cases, the appeals and this thing. So these perhaps are the possible cases wherein you can see the opportunity going to tribunals. So we want our members to be recognized as eminent, just like we had that name in excise. So we want that to be reclaimed in GST litigation as CMA, as one of the preferred professionals. So let us gear up for that. This indirect tax, in fact, you also have you have to keep a track of what is the movement that government is doing, the way the government is looking at next to the many times we address or we attend the sessions on to Vision 2047. So let us find our role where we stand there, and for that role today we have to start, so that there will be that opportunity. We are ready to take it up when it comes to us. Let's be proactive, let us be vigilant, and I'm sure that this success will be ours. Thank you very much, and I look forward for your interaction.
Thank you so much, Deshpande sir. May I now request our speaker on direct taxation, CMA Mrutyunjay Acharya sir, to please address the House.
Yes, sir. Respected President and Honorable Vice President of our institute, past presidents present over here, respected Central Council members, Regional Council members, a number of Chief Financial Officers and Director of Finances whom I know who are present over here, my fellow colleagues on the dais, respected CCMs on the dais, and all dignitaries present over here. Very good afternoon to all of you. My great pleasure over the period, over the years, to be part of the team Bhubaneswar in ICMAI. And what over the years I gathered that the thirst of knowledge, the process thinking which Bhubaneswar shows over the years, across the years, right, it's like absolutely exemplary. So with this ground remark, because it comes from the core of my heart, that's what I tempted to speak out the same thing over here. Now I go into the topic, the area which I'm going to cover in next couple of minutes, maybe 15 to 20 minutes max time, as the time permits, so and so. And we are going to sail the proper navigation into the direct tax transitions, right, in line with the across the world what's actually taken place, right? I take up not in details, but yes, in emphasize what Mr. Vatisa has said, that how we have put forward our visions, our versions, our speech, our motto before the concerned authorities time and again, and how and to what extent it is actually being reflected in the Direct Tax or Income Tax Act. And what more we are expecting and how we are progressing. I will just focus on that into this navigational issue to the direct taxes in the direct tax frontier. Lot of matters to cover. This entire presentations will definitely be circulated. Lot of matters to cover, what actually happening across the globe or across the world, and to what extent that wave actually comes in our country. We can think about something like a uniform tax platform like GST, which was thought about long back, 2007 onwards. Now it is the materiality, reality. We spoke about the global accounting standards, IFRS, US GAAP, etc., etc. Now the international standard accounting are there in our country. Everybody is following. The financial assets and liabilities valued under India's 109, which is global best practice, is now in our practice. In the same way, the issue of the cross-border taxation, the BEPS, the base erosion, profit shifting. I'm eroding the profit. I'm changing the base and parking the profit in some of the country, tax 7 country, where the corporate as a whole, the tax liability becomes minimum, can, or if the entire world is moving to catch hold of that thing in the name of say pillar 1 or pillar 2, to what extent we are ready and to what extent we are moving, right? This is what is the agenda in short. And finally, where we stand, where our institute stands, how we are pressing this matter before the respective authorities, correct? Since the matter is quite long, I will only take a navigation on the surface, and if a question comes later on, definitely we'll be able to ready for the reply thereof. It actually happens. I put the next slide first. That paper cutting, lot of you might be still recall, a paper cutting came couple of years back. Lot of eminent people's picture came out over there, and a country's name came out called as Panama Papers. Possibly over the period of time, the remembrances has been faded, right? We forgotten, but fact remains that there are countries where the tax is the main point of attractions, and that makes people go for a tax treaty shopping. the multinational players across the world, the global shipping companies, global airlines, the software companies, the consulting companies, they trace out and find it out the places where the minimum of the taxes are applicable. And few of them are in the next slide. So this becomes something like a global agenda, right? These are the few of the countries picture, the names, very well known, British Virgin Island, etc. So the objective from the direct tax and to globalization or to take the best practices is to only find it out that how the other countries are going about it, how the OECD is moving about, how the new rules are coming out. I will just take out few of the new rules that has already been published and been practiced, and some of the flair has already come in our country. Before moving into that, one interesting point, we speak about that tax haven. I am very sure in this entire audience, all of you or majority of you are quite aware about what is tax haven countries. But only to take a reference, if we take India, Mauritius, India, British Virgin, or so many other tax haven countries, majority of the income between the two entities in two countries are actually getting taxed, right? In that other country. What is that? In that other country means if it is India and if there is a Mauritius and the entities are located in India making a contract with the other party in the other country means the other country as per double tax avoidance agreement, it will be taxed in that other country. So very interesting part, what is the applicable tax rate in that other country shall become the tax rate on that particular income. Okay, gives a thrust, gives a motivation, right, to basically channelizing the entire business and to put the profit or book the profit over there and thereby depriving the country like India or some other countries where the contracting state is located but the destination becomes the tax owner. Okay, that precisely gives, this precisely DTAA gives the basic thought of BEPS, base erosion, profit shifting rules, and the new rules has already been introduced. India is also following. I'm coming slowly, but within the time frame. Okay, so all these places, all these areas, particularly fees for technical know-how fees, royalty, we do not know. The moment we take a KFC, we buy a KFC product, or drink a Pepsi, or some sort of a MNC product, okay, or use some cosmetic made out of by L'Oreal or some other multinational brands, how much are actually transferred out and booked in the as a profit in some other country, not in India. Correct? What the globe is moving, before I just push, because there are some changes. This has been introduced this year in the budget, union budget. I should not say that we are the only contributor, but yes, towards the end of the presentation, I will put forward what the suggestions, what is Mr. Anand, the Honorable President, and I am fortunate that I am a team member of the same, right? We put forward before the Union Ministry, the MOF, and something has come, right? What has come and how that is comparable with the global standards, Singapore, France, and other countries, I will just take maybe one or two slides thereof. Transfer pricing, everybody knows. I need not to take any time for that. Today, it is like a very common thing. We have one of our respected speakers sitting over here, Dr. Paritosh Basu, whom I know at least 20 years back, he given a thesis paper on transfer pricing. And today, we are speaking all about transfer pricing. So definitely all of you will listen from Dr. Basu maybe today evening. नहीं ठीक है okay what time लगेगा okay now what is important over here. I'm not touching transfer pricing, but what is important over here, respected members, a number of Supreme Court judgments has come in our country, number of High Court judgments also has come, wherein, right, the Honorable Supreme Court has said very clearly, I just read out, there are more than 10 or 15 judgments of Honorable Supreme Court. Number one is SAP Labs Limited versus Union of India. I'm not going once again into the court matter, but the court, Honorable Apex Court decided that if you speak about a transfer pricing, right, where profit splitting or some methods are being applied, then you please speak out very clearly what is the cost. Something what is written in the books, what is written in the act, just do not replicate. Please come out and find it out what is the actual cost they are in. Institute and the apex level given the same presentation to the Honorable MOF, Minister of Finance, that sir, if that is the Honorable Supreme Court judgment, every sphere, every line of our cost accounting standards exactly speaks what Honorable Supreme Court speaks. Why not that should be included? And this is what how the progress made. I'm not speaking about the methods. I'm only speaking about the last line, that to understand every method, right? Every method based is on the principle of cost determination as upheld by Honorable Supreme Court in number of judgment, including the Laurel Cosmetics India Private Limited. Very, very well-known judgment and very, very informative judgment. Okay. Something more. Some other rules has come. I think Dr. Pawan will take care of that portion in international taxation, so I'm not touching that. What is important now is that what is the global best practices? If DTA is there, that is both sides. If transfer pricing is there, that is also on the either side. Documentations, everything is there. But what is the global best practice? And where we stand in India on the direct tax frontier. Okay. So globally, OECD came out with adoption of international tax transparency standards. We heard about cost accounting standard, we have heard about Ind-AS accounting standard, we heard about tax accounting standard in our country. It is the global adoption of the global international tax transparency standards. Okay. Other things are already being mentioned. And then how this matter goes out. People says across the world, the OECD speaks out that whatever happens, if there is a tax, that has to be there. But you cannot take the advantage or benefit of the base erosion. You cannot erode the base. You do a business in India, you earn capital gains, you earn business income, you earn royalty, you earn technical know-how fees, you transfer it, tax it in some other horizon or region. So this base erosion cannot be just permitted. There should be certain restrictions, and that global rules has already been introduced. Okay. 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 Several initiatives has been taken across the world. And it is interestingly, next 4 or 5 slides will come into Indian position. We'll find it out the same things are taking place. Number one, the standardized international tax transparency framework has been built. And 2, the model legislation on guidance of the best practices that has been already developed. Very good. What is the purpose of that? What is the purpose of that? It's like automatic exchange flow of information and the banking details that needs to be transmitted. A new rule has come, new word has come, new buzzword has come called GLOBE, G-L-O-B-E. GLOBE stands for Global Anti-Base Erosion Model. This has been introduced in 2025 only. Okay, I repeat, if we heard about BEPS, if we heard about OECD, if you heard about the globalization of the tax uniformity, in which India is a part of the G20, right? Everything is taking place. What is taking place in the best practices in the tax management across the world. This rule has been introduced only a couple of months back. It's called as Global Anti-Base Erosion Rule, in short, GLOBE, G-L-O-B-E, GLOBE Rules, 2025. And it basically anticipates that whatever you do, whatever planning you do, wherever you go, wherever you shift, whatever treaty shopping you do, right, ultimately you have to come out with a minimum corporate alternative tax across the world at 15%, and that GLOBE want to ensure going to be introduced across the universe, including India. Okay, certain challenges that to what extent we are ready, in our country we are ready for that same. Some of the informative information that will come up, it says, Globe says that it is a system of that, the top-up taxes in India as a income inclusion rules and under-tax profit rules. These are different rules. Possibly the moment we speak about the new tax rules, the new tax legislations, right, the more and more inclination is towards the global convergence of the uniform taxation. Okay, I'm just skipping some of these things, coming to the Indian position, where we stand. After that, I will come into our institute position, and then finally, where we are moving towards. In India, few of the global standards or global best practices already been adopted. Okay. In any of the TP assessments, right, Honorable CCM sir is speaking about that the tribunal in GST and others. At the same time, what I like to repeat, that for the professionals, any of these, see, the more and more multinationals are converging into India, more and more multinational companies are over here doing the businesses, more and more exposures to the cross-world situations. Transfer pricing assessment becomes one of the predominant in most of the income tax offices, right? More of the faceless, while taking place to the normal taxation area, more focus is getting shifted to the TP assessments, and these are the three, what OECD speaks about: creation of the master file, the local documentation, and then country by country reporting, and then making a comparables thereof. This entire documentation, the filing process, what is being emphasized across the universe, now this has all come into our country. That's India, and Indian government, the finance ministry already enacted the same thing in the statute. I'm speaking from the frontier of the tax practices also, the absolutely greenfield for our profession, because I find out only very few people are on the professionals are in this particular field where absolutely greenfield is awaiting for all of us. Coming to the latest development in which we, at least this row we are sitting, we are a party, we are privileged to be a part of it. In TP, in transfer pricing, this time in 2025 Income Tax Act, 2 amendments has come. Number one, which is there on the screen. Number one, a new assessment scheme has been notified. The details are there, I'm not going into it, but second one, a concept of block assessment or assessment in a 4-year block that has been introduced. In other words, if you are assessed for a block period of 4 years, you are not required to again call for further information in the TP assessments. Good. What's the global standards phrase? What the global other good countries? I have taken only 2 or 3 countries example. In Singapore, because this is the call of the universe. Everywhere, every country is having the same issue. In Singapore, the law says if the TP documentation, that 3 that we have already discussed, if this has been already accepted by the transfer pricing authority or the income tax authority in that country, that will not be reopened for next 3 years. I repeat, once it is done, the same methodologies should continue to be adopted for the next 3 years. Okay. In India, first time we have adopted a concept of 4-year block. Singapore, it is 3 year. In France, it is also 3 year, that their country. In UK, again it is telling the same thing, that if you are, your entire methodologies, documentations are adopted, unless you change, we are not going to further assess it. Okay, good practices, definitely these are the best practices. There are other countries' practices also. I have not gone into the all because of paucity. That India, we are migrating from an age-old traditional budgetary practice where everybody looks for income tax, certain chapter 6A benefits and other. Slowly, these are all moving into the cross-border or international standards. We are adopting the cross-border international standards. Safe harbor rule, we have already introduced. TP assessment procedures, absolutely a global standard or global best practices, this has been adopted. Okay. Few questions that has been arising, time again, whether this 2-year, 3-year, what is there in the across the world, whether the same thing, what India has adopted a block of 4, whether that is sufficiently good or it require further amendment, right? We made again presentations, and in all these cases, right, in all these cases, only what I like to say before this August gathering, that honorable members or honorable president of our institute really has taken an initiative to basically push forward the thought process of the members collectively, that how the new direct tax should look like, right? It should not just look like a replication of the erstwhile law. It should look like a best practice of the universe brought in our country. And that's what the suggestions, what Bhatisab has said a couple of minutes back, that the suggestions has been provided paragraph by paragraph, telling or stating where we can contribute to the national building process. Okay. I think these are the points we highlighted. That's all on the screen. Look forward a better understanding by the select committee members, by the honorable members, ministers, everybody. And let us hope that these applications of mind actually get accepted by the Union Ministry and we get our real status. Okay. I only say that we all has to collectively move forward, not only by 1 or 2 driving forces, but the entire fraternity has to be driving force, right? The unlearning to the relearning, unlearning to the relearning, recasting the integrated process of the global best practices, domestic and cross-border tax into one platter and platform, right? These are the challenges, these are the processes of the transitions in direct taxes. And I heartfully request to all of you that this practice, this initiative that has been taken by the institute, whether by committees or by the president or the institute as a whole, need the entire support of the entire fraternity to make it all successful. Right? I come to the conclusion of my discussion, of my version. Any question from your side, I'm ready to reply. Till then, thank you everybody. Thank everybody in Bhubaneswar.
Thank you so much, Mrutyunjay Acharya sir, for that beautiful explanation on the direct taxation. May I request CMA Bhogivalli Mallikarjun Gupta sir, Associate Director of GST, RSM Astute Consulting Private Limited, to please address the House on indirect taxation.
Good afternoon, all of you. Yeah, before we get into the topic, I would like to ask you one simple question. How many sides does a coin have? Very simple question, right? 3. Perfect, right? So from a GST perspective, what are those 3 areas? So we all talked about compliances, we talked about litigation, and what is the other area which is missing for us? So the 3 sides of the coin, if you see, right, the one which is there between the 2 sides, that is only the compliance area. So are we content with that small amount of money what we have in our bank account? Or you want to have a wider exposure? So one is litigation, that is if you are a practitioner, and if you are a professional on the board as a CFO or a key CXO category or as an independent director in any company, that has more responsibility to do with the indirect taxes basically. My whole organization's tax strategy will determine my profitability, my brand, my market valuation, and it will also help me to get into the IPO. Now, when we have such a wide spectrum, the third side is missing actually. The second side, litigation also. Now, when I do compliances, the major challenge is I need to follow up with the clients to get the data. I need to see the data. I need to burn out midnight oil. Many a times my 11th, 20th, all these due dates happen during weekends or festival days. And what is there I am getting end of the day? Peanuts. Are we here to earn peanuts? After struggling and qualifying the examinations of CMA? No, right? So we should migrate, as Mrityunjay ji has rightly said, transition. I know change is constant, at the same time it is tough, but we need to transform ourselves. Until unless we don't transform, the theme of this NACMAC is not at all possible, that is corporate excellence. Now coming to this here, since the time given is very less, I would like to talk about only very important topics. Now, this is very one area which everyone should be able to do these things. As a students in the industry or in practice, we always talk about make or buy decisions based on my marginal cost, contributions and all those things. That is till 1st July 2017. But after 1st July 2017, we have GST in place. And if you see the Indian economy, which started as an agrarian economy when we got independence, then we transformed to a manufacturing industrial, and now we are into the services. Now when it comes to the services, there is lot of scope when we do the cost audits. Value addition can be shown there. From a GST perspective also, do I really need to invest on that asset? Or when I should make an investment in that asset? This will have an impact on my working capital, on my profitability, which will have an impact on my market capitalization when I go for listings. Now let us take an example in the infrastructure industry, which is purely drawn by the public sector or the government tenders, and realizations take lot of time. Should I go and invest in heavy earth moving equipment? Yes, I do get my input tax credit compared to the previous era. But what is the cost of input tax credit vis-a-vis the other things I need to do? Who can do that job other than we? We can do that cost benefit analysis. So one quick question I would like to ask you all. How many of you have done strategic thinking doing cost benefit analysis when it comes to the indirect taxation? We know all these topics. What is required is connecting between the dots and reading between the lines. Another industry, we talked about service sector industry. Now, when I am an exporter of services, the provisions clearly laid down that my refund can be obtained only when it is based on input services. Because my definitions of input, input services and capital goods is very clear in the GST law. Now if I need to export software services, I need to purchase servers. I need to purchase laptops or desktops for my employees. Now, can I take refund of that while filing my refund application? The provisions are very clear. And when the provisions are very clear, first as a professional, the question asked by the client, when input services are allowed, why not for inputs? Now my inputs or capital goods will have a long lasting impact. Whereas I am refund, I am claiming it only for a particular period. So that brings the gap between for us. Now if I don't take input tax credit, Or if I take input tax credit, what is my impact for me? Now, when I take input tax credit, I am not eligible to get a refund of that. It will lie in my balance sheet as a current asset. But what will I do? Until unless I have another line of business with the same registration number, I can cross-utilize that. In absence of that, we advise clients go and capitalize it, add it to the asset cost. When I add it to the asset cost, I will not have any impact on my profitability. Depreciation, it is a non-cash expenditure for me. Now, this problem is arising because I am trying to own those laptops or desktops or servers. But if I lease it out, that will become an input service for me. The moment it becomes an input service for me, nothing stops me from claiming refund. That is option A. Now, if I want to go for a listing, normally investors and the analysts will see what is my asset base. When my asset base is right weight, it has another set of challenges from the capital markets perspective and valuations perspective. Now, what I should do in such cases? So, what we suggest at this point of time is you need to do a detailed analysis, export your services with the payment of taxes. When you export your services with the payment of taxes, you can avail input tax credit on your capital goods and inputs and discharge it in GSTR 3B and then file your refund application, which it will be processed. So, your cash churning will happen there for you. Your working capital costs will reduce. That will have an impact on your profitability again there. So, these are certain key areas what we need to take care. Another important area which I would like to tell here is, now all of you know that input service distributor ISD has become mandatory. Now, based on my input services, which I am using it in a common place, has to be a portion based on my turnover to across my locations where I have my GST registrations. This is what we all know. But there are certain industries where I take services, input services, like my SAP licensing fee, or the firewalls which are installed for my servers, or I take any of my softwares as a SaaS platform. Now, those licenses are used by employees across the globe. Now, the question arises, should I distribute it based on the turnover to my offices outside India or not? So, if I am having licenses from SAP India, should I ask them to give me 2 sets of invoices? One for the Indian entity, another from one of their entities outside India to my country where I am using that. So, in that way, I am in line with my provisions. If I don't transfer for the employees who are sitting outside the country or based on the turnover, then my compliances will become an issue for me. So, this is one area which we need to be very, very careful. Now, when we are touching about the ISD, now, any industry today, we cannot survive without branding and marketing, which will always have a cost, and that is always built as a part of my cost, and based on which I determine my price matrix for each product. Now, when I have this branding costs or marketing costs, should I incur it state-wise, or should I incur it at my centralized GST registration number? If I do it state-wise, it's very tough for me. One is how much I should invest in each region. Based on the season, my matrix will differ. If I am doing an advertisement multi-state, like prime time ads in televisions, or if I get my branding done on trains, it runs through multiple states. Based on the distance traveled, I need to take my ITs and all those things will come into picture. So I need to do a cost benefit analysis there, and I need to see where I need to obtain my registration. Or should I go for a centralized registration from where all my marketing and branding expenditure is met? That will help me to apportion based on my turnover. Or else it will create problems like accumulation of ITs in one particular state. In another state, you need to fork out in cash to pay, discharge your tax liabilities. Again, that will have an impact on your working capital. So any strategy or any decision which I take, I need to visit from taxation perspective also. And we all know that today many of us have received notices between the differences in 2A and 3B, 2B and 3B, 3B and 9. All these are arithmetical notices and differences. When it comes there, should I really stick to that? Or can I have a strategy in the organization where these differences does not arise for me? Yes, we need to have a strategy which needs to be revisited every now and then. What should be my strategy? I should go at the time of my vendor onboarding. I should see the tax compliances history of my vendor. He may be the best in quality, but he is not at all tax compliant. What will happen to me? Since he does not file his return on time, my ITC is blocked. 18% impact on my working capital. Now in this case, what should be my strategy? He is the best guy or he is the only guy in the market? It becomes our responsibility to handhold such persons or taxpayers, because these are predominantly from the MSME sector. Now your payment terms plays a key role for the MSME sector or with your vendors. We can have a strategy. The moment I get my invoice, it is approved, it reaches finance, release the tax component, ensure that the tax is discharged by him, and before releasing the differential amount, verify his 3B filing and verify it has been there also in his 2B or not. Today you have a validation between your 1 and 3B and the ITC being claimed between 2B and 3B. In the past years, we never had these validations. So people merely filed the GSTR1. Since payment is not made, it has been disallowed for us. So all this litigation process we are going through there. So this is the strategy we should bring in. Then only it can lead to corporate excellence. Now we also talked about asset light strategy. If it is asset light strategy, it sounds good for me. But when I want to aspire and go towards the listings, that becomes a challenge for me. I need to do a detailed cost benefit analysis whether I should be owning the assets or doing these things. Another important thing here is and one of which point I want to touch base here is on your due diligence framework. We talked about vendor onboarding. Should I stop at my vendor onboarding time only or should I do at regular intervals? That is also very important for us. So today GST is using technology a lot. You have APIs, you have third-party service providers. You can use their APIs, validate the GST registration status at the time of placing the order, at the time of receiving the goods, or the time of releasing the payments. This will help you to do a lot. Now, this you are seeing it only from the recipient point of view. Now, what about my banking and NBFC sector basically? Do they have any impact of GST on them? The answer is yes. Now, nobody gives us loans free of cost, right? The asset has to be mortgaged with them. Now, the asset which is being mortgaged, is it done in a distress or not? Because we have provisions under GST Act, especially when you go through your section 81, which clearly says that if any asset has been transferred or a lien is created, in certain cases, department has the first right in such cases actually. It can revoke that. As a lender, I take the mortgage and department comes to know that the borrower has defaulted the tax liabilities and department can take over that lien. That means you are giving a loan without any proper security for that. And if it defaults, your NPAs increase. When NPAs increase, it has an impact on your profitability. It has an impact on your market capitalization. So these are the areas which we need to take care. And now, how many of us have really seen GST can be used in marketing also? I came across two cases, which two of my clients basically. In the initial days, we had this anti-profiteering provisions. So which clearly lays down that if you have additional input tax credit benefit vis-a-vis with your existing tax structure or reduction in tax rate, that has to be passed on to the taxpayer. Everybody is aware of it. Now, did companies really take advantage of that or not? In one of the cases, a confectionery company, what they have done is, they have done the cost benefit analysis because of the change in the rate structure and ITC, and smartly what they have done is, on their packaging, they introduced a red sticker with percentage of reduction in the price. Automatically it became a hit in the supermarkets. The reason is the competitors have not reduced the price, whereas this guy has reduced the price. Human tendency, right? Price has reduced. That's where the brand loyalty shifts. Once the brand loyalty shifts, it becomes very tough to bring back that customer. Again, I need to invest tons of money to buy that loyalty from the customer. So that is one classic example which I tell. Another case, medical devices. So medical devices, by default, many taxpayers treat it as electrical equipment. So this here I'm coming from a classification perspective, from a GST perspective, but the profitability and market share impact is here basically for us. Now when everybody in the market were charging for certain set of devices at 18%. This guy comes back to me and says that, is there any possibility that I can reduce the classification? Based on the classification only, my tax rate has to be reduced. So we gave a legal opinion. We said that medical devices are governed by certain government norms, and once you have a certification, it will be treated as a medical device. The moment it is turned out to be a medical device, the tax rate has come down from 18% to 12%. That's where my price is becoming competitive in the market. I'm not doing anything. I've not spent extra penny on my branding or marketing. I'm only leveraging the provisions and interpretations of the GST here. And they received notices from the enforcement agencies, because everybody is doing at 18%, how can you do at 12%? We fought the case with the enforcement agencies, and the client is also very happy. So as a CMA, whether you're in practice or you're holding any CX category position or whatever is the position, you need to optimize the tax benefits to achieve ultimate corporate excellence. That will help us to grow in the long run. I know I have to skip out certain points because of the paucity of time. The presentation is with the organizers and they'll share it with you all. I'm happy to take the questions after the other speaker session is done. Thanks a lot for your patience hearing.
Thank you so much, Gupta sir, for your beautiful speech. May I now request the last resource person of this technical session, CMA Dr. Pawan Jaiswal sir, Senior Tax Consultant and Finance Expert, to please address the House.
from the city of Ganga, Yamuna and Saraswati, I am conveying my best wishes to all the dignitaries on the dais, of the dais, who are present in the pious and holy city of Lord Jagannath, Balbhadra and Ma Subhadra. I think so many things are being covered in the presentation. So I am leaving this presentation for all of you. And I request the organizers to mail this presentation to everyone. Now let us have one-to-one interaction regarding this international taxation and taxation, what is going on. And everybody is very much anxious about whether we are going to have the power of audit or not in time to come. Let us have. See, once it comes that a CMA or cost and management accountant is giving his opinion to any company, corporate, government or judiciary regarding the intricacies of taxation, it works. Try to have eye on opinion giving capacity, to hold opinion giving capacity regarding indirect and direct tax. In GST, we are having a good space for us, as our previous speakers, keynote speakers and speakers have already emphasized that let us practice with the tribunal. We are not supposed to work better in High Court or Supreme Court, but up to tribunal we can show our competencies by preparing a nice petition, perfect petition, including so many cited case laws, the interpretation of the act, rules and other things, and presenting before the honorable bench of the tribunal of the income tax and GST both. Friends, the word international taxation, now you see a cost and management accountant is maybe working as a tax consultant. But I never seen a board of a cost and management accountant like international taxation consultant. It's a huge and vast area where you can work. As such, there is no difference between direct tax, domestic taxation and indirect international taxation. The laws are the same, but something is different. Some provisions are different for taxing those who are earning income sitting abroad, earning income from India, or sitting in India but earning from abroad. It's an international taxation. From a very initial stage when we started in the intermediate or BCom, so we have started with section 6, residential status, resident and non-resident. And it is the right time to decide the resident and non-resident. Who is NRI, who is not NRI. In case of individual, number of days to be calculated in a block of 5 years or say previous year. And for a companies, for domestic companies registered in India, they are always residents. And for those not domestic companies, if control and management fully situated in India, they are known as resident company, otherwise non-resident. So beginning from residential status, if you have calculated the residential status of an individual or other than individual, then you proceed for PAN. PAN means permanent account number. If the person is already having PAN, if person is Indian citizen but NRI, if having already having PAN, but if person is citizen of abroad but NRI in India, and first time or any time he is entering into the financial transactions within the 14 nautical miles of the India or within the territory of India, he need to obtain PAN, and that PAN is known as international PAN. NSDL is right now, since last 20 years, after advent of e-taxation, entitled to issue this PAN cards with the help of the income tax department. This international PAN card cost around 1,000 rupees. Here, some different documents are required. Rather, Aadhaar, it requires your PAN, POI, etc., etc. So you need to obtain PAN. And after obtaining PAN, now you are, say, you have started doing transaction with India. So if you have, or you have started doing transaction with abroad, you are citizen in India, resident in India, or non-resident in India, you are citizen of outside India, you are non-resident India or resident in India. So many combinations can be there. Now, for income, business income may be there, for capital gains may be there, royalty sort of the things, technology transfers sort of things are there. But all the 5 heads are there: salary, house property, any foreign citizen or a person who is living abroad, Indian citizen but NRI in India, having a property in India, through letting out it, he is having income. From selling out it, he is having capital gain, bonus, dividends, etc., etc. So assessment procedure is altogether same. Assessment procedure is altogether same. If he is agreed by the assessment made by the income tax department, he has to file his first appeal before the CIT appeal. Form is the same. If he is again agreed by the income tax authorities, then he have to file second appeal before the appellate tribunal. Procedure is the same. The tedious provisions are also the same. Rather, you say tedious provisions are harsh. If any entity outside India is doing some business in India, is earning profits, any payment made from India should be subject to TDS. TDS should be made. If any Indian citizen, any Indian or any resident is selling out his property worth more than 50 lakhs rupees, circulate, subject to 1% TDS. Whereas one NRI is selling or disposing out his property in India, then the rate of TDS is 20% plus surcharge. The form which is used by the resident Indian is Form 26QB, whereas the form to be used by the NRI, it's Form 26Q. He has to obtain, the buyer should obtain TAN, and then buyer should deduct tax on the payment made to the vendor. Assessment procedure is the same. TDS provision is something different. And for those who are indulged in international transactions, for them income escaping provision is something stiff. Like if you have any property across globe, but you are, say, resident or non-resident in India, or you have not disclosed your property or income, fact of that property or income into your returns, then reassessment can be made within a block of 16 years. So in case of international taxation, we should think about having our own consultancy. Act is the same. Sections are the same. But we have to filter the sections or rules made for the international. You see, there are so many persons, Indian citizen, now they left their citizenship, they took the citizenship abroad, they want to dispose of their property in India. They want to get rent from the property in India, but they say, how I can done this process, how I can transfer my property. There are so many processes like entering the name of the owner or the successor into Khasra, Khatoni, registration by the sub-registrar, taxation, other things. So we can have this, you can say, we can have a good chance to show our caliber or skill to practice the international taxation. There is indeed a double tax. Mrityunjay sir already discussed DTAA. The Vienna Agreement 1969, it was initiated. Right now, India is subject to DTA. India is also honoring so many countries for delaying. So DTA is nothing, means at the same time, the person who is paying tax at somewhere else should not be taxed again. This is the theory behind the so many nations. And this DTA can be entertained through by using this credit method or deduction method or exemption method as suitable to the SSC or for a particular country. So, as far as, because this is the, I think this session, time in this session is already exhausted. So, I have to make this particular session in a concluding manner. I can say, there is a lot of opportunity lies in taxation, both in income tax and GST. As far as audit is concerned, it is the one of the pillar for attracting ourselves into the Income Tax Act or GST Act. But we are into it. In time to come, since our CCM, our chairman, our previous chairman, our previous presidents, our current team is hell-bent to get the name of ourselves to introduced to be parallelly read with the definition of the term accountant. So I should not say I hope, that I say that in time to come, because a very understanding and very lucrative as well as adjustable leader or leadership is there, and under the flagship of Honorable Prime Minister Shri Narendra Modi ji, definitely will see in a very short period of time that accountant includes not only the existing definition but additionally cost and management accountant too. We have to show, as one of our previous speakers said here, transparency, presence, beauty. Now we have to make ourselves different from others. The way you render the services to the clients, to the corporates, to the government, the way you suggest them to keep the housekeeping, and the way your suggestions or opinions are best suitable to them will be the guiding factor for time to come to establish ourselves as a successful cost and management accountant in the dynamic era of income tax and GST. Jai Hind.
Ladies and gentlemen, before we end this session, we have a new set of launches of various books which have been published by the Institute on various topics. May I request all the dignitaries on the dais to please launch the books on practical guides to direct and indirect taxation. The name of the books that we are going to launch is E-Filing of TDS and TCS Returns. Second one, a practical guide on advanced tax, MAT and AMT under the Income Tax Act. The third book would be Price Determination Methods under Indian Transfer Pricing Regulations. The next one is Practical Guide on the Compliance of Income Computation and Disclosure Standards under the Income Tax Act. The next book after this will be How to Avail Input Tax Credit. I request all the gentlemen on the dais to please launch the publications of the Institute. And last but not the least, the book would be Practical Guide on Appeals Before Appellate Authority under the Income Tax Act. I request everybody to be seated. Please do not leave us. We shall have a wonderful session after this where we will be having great leaders of the nation who are CMAs. They will be addressing you all. Please come and please be seated inside the auditorium. Yes, that one. Thank you so much, ladies and gentlemen. Now I request CMA Barda Nayak to please give his formal vote of thanks.
Namaskar, Jai Jagannath. With folded hands and a heartful of gratitude, I offer my sincere thanks to the Amity for guiding today's enlightening session on navigating the direct and indirect tax landscape. I express my deepest gratitude to our esteemed speakers and dignitaries for illuminating today's session with the light of wisdom on taxation. Your insights are not just professional learnings, but scared offering to the cause of national growth. Thank you, sir. I also thanks all dignitaries for the release of our special publication and our dear audience for their spiritual presence and participation. Thank you, sir.
Thank you so much, everybody on the dais. And I request everyone not to leave the auditorium. We shall have a great session after this. We shall have 15 leaders will be speaking to you. Please do not leave the auditorium, please. Sir, those books are available for sale on the counter. You can please take it after the closure of the leaders meet.